Our friend Kramer likes to say there's a bull market somewhere. It looks like there's a bull market just about everywhere. When you're talking to your clients, how do you tell them to play a market here in the U.S. and really globally that seems a bit extended?
And we still like the U.S. Over the rest of the world, and you got to be a little careful in emerging markets because some funds in emerging markets are definitely very weighted to China, who has been kind of the thorn in the side and not rallying along with the rest of this global lockstep bull. But when you look at it, you realize the breadth is better. It's not just the Magnificent Seven. They get a lot of coverage, but you have the granolas in Europe. They've got to give it to Goldman Sachs for finding a better algorithm there. And so you have them rallying, you have Europe rallying, you have India rallying, you have Japan rallying. It's not just US tech, it's not just the Magnificent Seven. Multiple sectors are lifted up, multiple companies trading above their 200-day moving average. I think we're at 60–70% now. And so you look around and say there's a lot of optimism, and it's not just this narrowness that has been the focus since October.
All right, so you got your WEX word of the day for us. It's a great reference. I'm just going to put out the nerd alert right now.
Absolutely, 100% nerdy, but it's Kobayashi, as in Kobayashi Maru, because the Fed is right now in their own Kobayashi Maru. If they go too quickly, they risk inflation reaccelerating. If they go too slowly, they risk a recession. It's a no-win classic Star Trek scenario. And so I look at this and say, maybe they can pull off a Captain Kirk, find a way around the system and figure out a way to win the non-winnable scenario. But it is really tough with inflation kind of popping up a little bit, not just one data point in January. Now you had February coming in a little hot. The Fed is in a Kobayashi Maru, 100%.
You know, by the way, great reference, and there's no Dr. or Mr. Spock on the sideline saying that Kirk cheated. We're getting too nerdy. I want to get back to the markets, Vicky. What do you make of yesterday? CPI was a bit hotter. One thing that a lot of people were concerned about was shelter inflation, but still, we saw the S&P hit a new record. We saw a broad-based rally. I mean, what does that tell you?
It tells us the markets are focused on more than just the Fed. Yes, the Fed is a big player, but number one, expectations are still steady at 3 to 4 cuts this year, which is more aligned with the Fed dot plot. We are definitely going to need to watch what the Fed says and changes to the dot plot next week. But investors are looking beneath the surface on this and saying, okay, the Fed is restrictive. Fed's probably staying restrictive till the summer, June, July for the first cut, but we're still going to get cuts this year. And it is likely we will get cuts, even if they're a little bit slower. But now we've seen the swaps market realign with what the Fed is saying, and I like that better. It gives the market confidence that we kind of have a clear vision forward. It's going to be data dependent, to use Powell's favorite word, but there is potential we still have cuts in the market. Market likes that.
All right, so I want to get to your picks, both of your picks. They're reporting earnings coming up. Adobe and Dick's Sporting Goods. Why are you in favor of buying these stocks right now? Both are trading pretty close to all-time highs.
Sure. Number one, Adobe's pulled back because they have the threat coming from OpenAI and their potential text to video technology. But we feel like Adobe can protect its moat. They need to prove their moat, though. They need to show that their product is superior. But they've done great. We think they have a large runway to increase their annual recurring revenue. They're doing renewals on Adobe Pro plans, and they hiked those about 40%. So they should continue to see strong revenue growth. It's going to be a lot about the Gen AI and how they can push Firefly forward. They've had some good demonstrations, but even if they see some potential problems coming from competition, they're still the trusted source for creative and for image editing, which editing is still going to need to be done. And then Dick's, we really love their concept. Number one, they hit a higher end consumer, and we've seen the higher end consumer do very well this earnings season.